In today's video, we're going to talk about bridge loans, how to buy a new home without selling your existing home, why you might want to do this, and qualifying for one. Well, let's start with the definition. A bridge loan allows you to buy your next house without selling your existing home. It allows you to access the equity in your existing home to purchase your next property. Well, why would you want to do this? Well, there could be two main reasons for that. Maybe you have a lot of items in your home due to years of living in your house, and you want to take your time with thinning out those items for your next home, and you want to work to transition slowly. A lot of times with too much clutter, you get a lower price when you want to sell your home. So perhaps thinning out your home would also provide to you a higher level of profit for when you sell your home. You might get more buyers that like your house due to it being thinned out. Many people can't qualify for 2 house payments. And so a bridge loan is so nice because it eliminates the existing house payment that you have and allows you to qualify to buy the next house. And the second reason is a lot of people can't qualify with 2 house payments. So they have to sell their existing home in order to, 1, access the equity in their home, and 2, qualify with what we call a debt-to-income ratio. So they can't afford within their existing income to qualify for 2 house payments, so they have to sell first. Well, then when you go to purchase a home, you have to make the offer contingent on you selling your existing home. And that might be fine if there's no other buyers interested in that property and the sellers are willing to wait for you to put your house on the market, to sell your property, to get an offer that you like, and to close on that home before closing on theirs. However, many sellers don't want to take that chance, and they don't maybe want to wait for you to sell your home, especially if you're looking to buy in a highly competitive area that has other buyers that don't have to have a contingency. So a bridge loan allows you to take out of the mix. It works if you have a lot of equity in your existing home. What is a lot of equity? I would say 30% or more equity. So a bridge loan is virtually a short-term loan that gives you 6 months to put your home on market and sell it. And if you're worried about making 2 payments, oftentimes bridge loans allow it so that you won't have to make 2 payments. You don't have to make a payment on your existing home. Many bridge loans allow that. And so it doesn't give you the pressure of having to make 2 payments. Our bridge loans allow that. And the third thing is that qualifying for a bridge loan is easy. In fact, the 2 things that you need is a lot of equity and to be able to qualify for your new house. That's it. A lot of times people that don't do bridge loans will say you don't qualify for a bridge loan, and that's probably not the case because you don't have to qualify with 2 house payments because you won't be making 2 house payments. And if you have a lot of equity and can purchase the next home with your debt to income ratios, then you're probably going to qualify for my bridge loan. All right, let's run through the cons. Number 1, you have to have a plan to sell your home. Typically, you want to start putting your home on market or getting your home ready for market within 2 weeks after you close on the bridge loan. Why? Because you have 6 months to sell, close on your bridge loan, and then pay that loan back. Number 2, there are closing costs to a bridge loan, so you'll want to make sure that you consider what the costs are in doing the bridge loan. And now for the cons of a bridge loan. Number 1, ultimately you have to sell your home and you have 6 months to do so. So you're going to want to have a plan of action after you close your bridge loan. Within a couple weeks, you should be ready or getting ready to put your house on market because you have about 6 months to sell your home and pay the bridge loan back. If you don't sell your home and pay the bridge loan back, there are repercussions. So you'll end up having to discount your home to maybe to a willing buyer, or the bridge loan company will offer to buy your home back. Either way, you can't have this bridge loan open indefinitely, so you have to have a plan of action. And then the other thing is that there is closing costs with a bridge loan. And so you'll want to consider those costs when you purchase and look to sell with a bridge loan. And some bridge loan companies force you to refinance, giving you another set of closing costs after you close on the bridge loan. Our bridge loans do not do that. Once you close on your home, you have your bridge loan, it pays pays off your existing home, and then you have your remaining equity or remaining money, and you can put that on your new mortgage if you want and recast your loan. There's a video that I have out there on recasting your loan that you can look up, but you do not have to refinance. There are bridge loan companies that offer the option for you just to close on your bridge loan and not have to refinance. So in summary, a bridge loan is easy to qualify for if you have a lot of equity and can qualify for your next house purchase without having to be burdened with your existing home. There is a lot of great options to talk through. If you have questions about it and want to seek a bridge loan, I'm available and can be reached at the information following. Thank you and have an amazing day. This is Dawn Connors providing you fantastic mortgage solutions. And please share this video out to those who are interested in looking at a bridge loan.